Hello, everyone. It is Evan here from The Trade Risk on Friday, August 25th, here with Stock Market Weekly, episode 696, where we break down the most important trends, price action, noteworthy moves across financial markets, try and keep you ahead of everything that is going on here. And we're going to jump into the headlines right now, some of what we're going to be discussing in this week's video. The big story as we moved into this week was Nvidia and the Fed. And the first story out with Nvidia, they had a high bar going into this earnings announcement. Remember, Nvidia is really at the epicenter here of this big explosion in AI that we've seen really kind of take place or take shape here in 2023. And they absolutely crushed it going through their earnings. I think it was like $13.5 billion of revenue versus an $11 billion expectation, and then they guided up again beyond the street's expectations. So all is to say, very impressive numbers out there, and continues to just really impress is kind of the bottom line. Jerome Powell also out on Friday, kind of, most of the same. I don't know that there was anything truly different in terms of the language and rhetoric out of the Fed this week on Friday. But certainly, one of the big takeaways is he's not afraid of raising rates again, or at least going one more time and holding them there. So I think markets may be pricing that in, but markets, quite frankly, have sort of done a good job of getting to where the Fed's head is at. This whole month, we've seen yields really trend up, and they kind of matched where I think expectation is on what Jerome Powell was saying on Friday. So bond yields this week finally taking a bit of a pause. They didn't really give anything back. It's not like we saw a big reduction in interest rates. We really just saw them pause, and so we're still kind of waiting to see how that trend continues and takes shape. S&P 500, Nasdaq, they did stabilize 3 weeks down in a row. Finally, fourth week here, they did rebound a bit. We're going to talk about all of this, of course, in just a minute. And then we have the dollar index up 6 weeks in a row. So lots going on in macro land. We're going to get into it. Stay tuned right now. All right, here we go. We've got some charts open. We've got TC2000. That's what we're looking at. That's the charting platform we're using throughout this video. For you TC2000 users out there, you got to check out our website. We've got lots of tools, scans, indicators, layouts, all the good stuff for you to get more out of this platform. Or if you need something custom developed, we do that too for TC2000 users. So check us out at thetraderisk.com. And let's get into it here. So on the top left here, we can see, I guess a mixed picture. Top of the story, I did say S&P NASDAQ did manage to stabilize this week, turn around a little bit. You can see both those indices were up just under 1% for the S&P, NASDAQ up 1.5%. Dow Jones was down. World Stocks International, or the Russell, I'm sorry, we don't track the ACWX anymore, it's a habit. Russell 2000 here also down. So Dow down, Russell down, S&P, NASDAQ both up. If we take a look at the volatility regime here, was positive this week. We did manage to drop a point here in the NASDAQ index and S&P about 1.5 points. So we're still above 20 here for NASDAQ vol, but 15.68 going into the weekend here for the VIX. Pretty decent level, all things considered. Remember, the markets were hanging on to two big catalysts this week. Nvidia earnings, which was really just the blanket AI sort of trend, so to speak. And then also Jerome Powell on Friday. Both of those events are now behind us. And so I think we can at least breathe a little bit of sigh of relief there in terms of volatility and those insurance premiums. If we take a look here at the sector overview, you can see it was a very split race this week. Technology was the strong rebounder. Remember, technology had been hit the hardest in this correction, this pullback, whatever you'd like to call it. So finally getting a little bit of a bounce here. To consumer discretionary in the second spot and real estate in the third spot, up 0.75%. On the downside, energy, which had been the leader, taking a breather, so it's sort of swapping of places this week. Staples and healthcare also in the bottom three here. Still, you can see really it was 8 out of the sectors pretty much flat or green almost. Both of these three here just down slightly this week. So it was mostly energy and staples that had the big weakness this week. I think Dollar Tree helping drag those staples down. Let's take a look here at our smart trend filters. This is our sector grid here, just kind of measuring and mapping trend strength. And we can kind of see that just visually, most of these sectors here are still in pullback mode. You're seeing red dots get printed across your screen, just generally speaking, is a bearish outlook there, or at least a bearish positioning. XLE here is energy, and you can see that's kind of still green to yellow and looking okay. Biotech trying to turn up, healthcare still, kind of struggling to turn up here as well. Now, if we take a look at market breadth, one of the things we've been talking about these last few weeks is the uptick in the number of 52-week lows being made in markets. And you can see here, there hasn't been a tremendous amount of change here. We are still seeing more 52-week lows, more stocks dominating the 52-week low list than stocks hitting 52-week highs. That ratio, of course, if you're a bull, is not what you want to see. You want to see green spikes here. You want to see more stocks breaking out to 52-week highs. You're not seeing that right now. You're not quite seeing a continuation of surge of 52-week lows. So you're in this kind of weird period where there's just general weakness or uncertainty, and it kind of coincides with this pullback that we are pretty much still in, regardless of the small turnaround this week in S&P and Nasdaq. You can see if we look at the percentage of stocks above a 50 SMA all the way back down to 24%. So we've seen a pretty good reset here. If I zoom this chart out and I go back several years, I mean, you can see generally speaking, in the worst sell-offs, you do get about 10% or so. 10 to 15% would be a pretty dramatic sell-off, but oftentimes during the ordinary sell-offs, low 20s is usually what you get for a reset here in the percentage of stocks above a 50 SMA. So we are nearly there, although it seems like we could still move a little bit further down. Now, if we take a look at IBD's top 10 list, so this is IBD's top 10 from their 50. Shout out to IBD because they are a sponsor of the show. They make the show possible. So you can support us, support them with a link in the description. Get yourself access to their digital subscription. That's what I'm pulling this from. And you can see top 10, there's been a couple of new names entering the list. I believe MedPace is new, and First Citizens, I believe, is new, or maybe it was DFH. But a couple of new names on the list. You can see, generally speaking, a pretty good list of performance here. The top 10 list here, ACM leading the pack up almost 20%. Both DFH and FCNCA were negative, but a pretty good roundup there. You can learn more in that link in the description of this video. Let's move on to commodities here. Silver, top of the list, 6.5%. Very impressive move for silver. Gold also rebounding nicely, 1.31%. Agriculture was really kind of just a good period here for commodities, generally speaking, and that's in the face of an up dollar. So dollar index was up 6 weeks in a row. Very impressive strength, not letting up. Oil, natural gas, both of those were down this week, even though they were a bit just slightly down. If we look at yields here, so again, this is the big story. Continue to talk about this. Interest rates, yields, this continues to break out. This will continue to put pressure on markets. That is my belief. We saw a bit of a pause this week, but really not a big change. I mean, we have been ratcheting up these yields, and we didn't really give a whole lot back this week. We mostly just paused. So right now, I still think there is risk here and what this could spill over to equities, but TBD still. We're going to continue to measure it. We are at some key spots, especially in the 10-year, basically just starting to eclipse the old levels here back from fourth quarter 2022. If we fail gracefully here, maybe this is, a beautiful spot that risk appetite comes back, particularly for tech. But if this continues to push up here, then again, I think that pain trade continues. So let's see where we're at in terms of price action, S&P 500 and all the like. We're going to start with a weekly picture here of the S&P 500. And you can see we've got our old trusty sort of grid roadmap on our charts right here. And after 3 weeks down from essentially the 4,600 resistance zone, this overhead zone, from the top of that zone all the way down to essentially our next zone over here, 4,300. And again, these levels don't move. I don't really dynamically change any of these. I mean, for those of you who've been watching the video, these have been printed on my chart, very kind of, I don't know, I'll call it a lazy approach, but an intentionally lazy approach to really just kind of highlight the big key levels. That's what I'm really focused on, of where the market has shown that it cares about really reacting in terms of past inflection points. And these are the big levels we've been watching, 43 to 46. This is the playground that we're in, the trading range that we're in. And we've almost gone now full trip here from the top to the bottom. And we're getting a bit of an inside week. So first thing to notice on this weekly chart is this week, we traded entirely within last week's full range of motion here, or the upper wicks, lower wicks. So we've got an inside week brewing. This usually just gives us a little bit of, let's say, attention that we want to be giving to this market. Just shows that there's some contraction here. Market could be getting ready for a bigger, more explosive move. So we'll keep an eye on that. If we go down to the daily chart, you can see we certainly are getting some bigger candles, and the range is picking up here over the past week. Effectively, you know, last Friday, as we talked about, we finally got a little bit of a stance here, right? We finally got a close towards, an open, gap down open with a stronger close, with a little bit of a change of momentum last Friday. And then on Monday, when we came into the week, we got some follow through. We actually had a follow through session, and I believe we spent some time last week talking about, you know, really the first step, the first baby step you want to see in these corrections is the ability for buyers to hold above a prior day's high, or at least a prior day's close. And we did that. We finally got some signs of strength here on Monday with that follow through session. When Tuesday gave us a little bit of pause here, right? Opened high, closed low. Didn't really like seeing that, but guess what? Didn't last long. Didn't get follow through. Wednesday, we continued up. Again, open was the low of the session, and continued to trend higher for Wednesday into the close. Wednesday into the close was Nvidia's earnings. Nvidia's earnings did not disappoint, but it was the high point for the market here. We put in a pretty nasty looking bearish engulfing bar here, really all across, you know, certainly technology names, but most of the market printed these ugly, horrendous looking bearish engulfing bars. And this absolutely took the momentum out of the market. We had a few days up, and now we gave a lot of it back on Thursday. And then Friday, well, we couldn't get it easy continuation day down. We had to make it hard. We had to reverse and put in a little bit of a stance here by bulls. So really, you know, that's the day-to-day bar-to-bar action this week. Generally speaking here, it's going to depend on your time frame. We're in the middle of these big, broader ranges that we talked about, 43 to 46. That's going to be a lot of noise. There's going to be a lot of chop like this, a lot of indecision, a lot of back and forth. If you're short term and you're trading it, well, you certainly have some ranges to trade with, because we've had some nice trend days over the last 4 or 5 days. But generally speaking, still not seeing a big change of character here one way or the other. It seems like we're just kind of trying to find some sturdy ground. We at least stopped the bleeding. We've got some lows we can work with. We've got the low from Friday of last week down here. We've got the low now from this long range day on Friday. So this could be some spots if you want to take a shot on the long side. You know, you've got some levels to sort of use right here that you can start to pay attention to. But again, if we start slicing through those, really want to look quickly at this 4,300 level, which is a more intermediate term zone. If I look at the Qs here did find some support. Again, very similar pattern, kind of follow through day on Monday, bit of a pause Tuesday, trend day on Wednesday, and then just this big, ugly, bearish engulfing bar with a stance here on Friday. So this looks exactly like the S&P 500. We managed to kind of, you know, again, put a pause in the sell-off action. But I got to say, when I look at this price action, I don't know that we're done. I don't feel all that confidence, right? This is my personal now opinion. I don't feel all that confident that this low is in. It does feel like there's some unsettled action here. It does feel like we're still kind of in some pullback mode, or at least a volatility area here for the market where it needs to do some more digestion. So I don't know that I'd be all that excited with this week's action, but at least, again, we've got levels to use. We've got the lows from Friday. We've got the lows from, well, frankly, both Fridays, right? This Friday and last Friday, I think are both good spots to use. And then this prior 357 zone is what I'd be paying attention to for the Qs. Russell 2000, again, you can see this week, a lot more weak here. And again, this is energy and financial dominated, which had some pretty heavy, sort of price action this week. Very, very flat though, very sideways here. So this is, quite honestly, a lot more actionable only because it spent its time all this week essentially trading totally sideways, right? Lots of overlapping bars, lots of fuel getting sort of picked up here for some potential fall expansion. So keep an eye on Russell. Again, it did almost like a round trip from its July run up. It gave all those gains back, and now it's waiting for its next move. Do dip buyers step in here and support it once again, or do we roll over and make a second leg lower back into the old first half range? That's what we're waiting for here in the Russell 2000. So that's kind of the lay of the land there in terms of price action on the major indices. You got a little bit of a pause here, but I'm still paying attention to interest rates, right? Treasury bonds, IEF, 10-year yields, right? This is, of course, the bond fund. And you can see we came all the way back down, basically tested essentially the lows here from the fourth quarter. You can also look at it from the yield perspective, right? If we look at the yield index, you can see came all the way back to that fourth quarter reading there. So I want to see this trend really kind of break down, to be totally honest with you. I would love to see this breakdown to give me a little bit more confidence in some of the equity market price action to maybe suggest a little more confidently that a low is in, but I still don't see that yet. I still see some pretty firm price action here. It does still feel like bonds are a bit heavy. We'll see. Obviously a lot of contrarians here betting that we're gonna, kind of top out just where we topped out last year, that bonds can start to rally here. Look, it sounds plausible, but I need to see it from the price action. I'm not really seeing a tremendous amount of volume or anything that's really got my attention that some type of reversals in, but I'm willing to be open-minded. I just would love to see a little more proof there. Speaking of that, and along the same lines is the dollar. The dollar index is just absolutely relentless here to the upside. 6 weeks in a row, breaking above this pretty much, not quite 52-week highs, but awfully close, 10-month highs, resolving this range to the upside. Here's a weekly chart of the dollar now. Remember, we had this huge move up in 2022. We saw this pullback in the fourth quarter of 2022, sideways this whole year, and now we're starting to push back up. So keep an eye on this. Again, obviously tied to interest rates. They kind of trade one and the same, but this continues to show just a lot of strength here. Also, something that would give me more confidence is if this rolled over, again, kind of hand in hand with interest rates topping out. That would give me a little more confidence in equity markets as well. Let's take a look at gold. You can see gold here rebounding a bit this week. So up 1.31%. It was down 4 weeks in a row. So finding some support. Nice to see. I talked last week about a gold position I established. So I was purchasing gold here last week, a little bit early into these lows, but so far so good. One of the things that, let's see if I can pull this up quickly here, is the... this on one of the indicators here that I look at occasionally. Sometimes if I'm just looking to sort of preemptively look for turning points, is one of our MACD divergence indicators. So this is like a fully systematic, kind of sniffs out divergences between what MACD is doing, what price is doing, and you can see it does coincide back here. We got a nice kind of topping sell signal back in gold in May. I started to get the buy signals printing here in just last week, frankly, and this is when I started to get a little more interested in it. You got to be careful using this because it can always be early, but one of the things here, I had a couple of questions come in on why I was buying gold last week. So this is at least one of the technical things you can look at, or I look at sometimes when I'm buying something a little bit early into lows. lows, right? Into support, into potential support, right? And this is one of some of the supporting technical factors that I can use. So this is a indicator that is on our website. It's a MACD divergence indicator. It's also an RSI divergence indicator as a slight tangent. So gold working out, have a long position. We'll see if we'll see how that trade continues. What else do I have for you? Let's look at Nvidia, because that was one of the things I certainly talk about. So of course, you know, this was price action. Let me zoom out here. You can see weekly chart now gave back its all-time high breakout levels, right? So this was trading 500, almost 500 plus, certainly 500 plus in the after hours, but gave back some of those gains. It was up 6% this week. Heavy volume as you might expect. Daily chart though, you know, just looks like some turbulence here. I mean, again, earnings was a blowout in terms of numbers, but obviously Nvidia is priced pretty rich, right? So it's, you know, the market has been really good at sort of getting in front of these blowout numbers, has been pricing in a lot of strong growth here. And of course, it's going to be hard to sustain. The market knows that in terms of these, especially when it gets to this, you know, market cap this size. So some turbulence here. You know, again, this will be interesting, right? We've got kind of a failure to hold these highs, right? Just off of earnings, right? Big numbers, and the market could not continue to rally. And this, again, I just can't help but think of Microsoft going into its earnings or right around its earnings when it broke out to new all-time highs and then failed pretty gracefully. Same thing for Apple, right? Broke out of its all-time highs and then failed pretty gracefully. Will Nvidia now be the next kind of horse to fall here and ultimately top out after such epic earnings? It will certainly be interesting. If you are someone who likes to be contrarian here, you do have pretty defined risk, right? I guess if you wanted to short this against, you know, $500, I'm not suggesting that that's a great idea. I certainly don't have any of that on, but it is defined, and you do have at least a little bit of a technical kind of thrust off of and a false breakout here of highs. It doesn't sound crazy to me. I don't know what your probability look like. Might be a good options trade to express it, but that really goes beyond the scope of this video. What else can we talk about here? Talked about Nvidia, talked about yields, dollar. I think that's about it. Let's take a quick look here at some of the strongest and weakest stocks here. Let's see if I can get back to a blank chart. And let's look at technology here. This was the top performing sector this week. And if we just take a quick look at some of our best performing names in the best performing sector this week, Palo Alto at the top of the list here, up 10% this week. Autodesk, take a look at this. This was actually one I was just staring at. Look at the size of this consolidation here. I mean, talk about orderly and pent up. You've got a stock, a very, you know, historically fairly volatile stock that has gone absolutely nowhere in about a 30-point range here for almost 2 years, a year and a half or so. And looks like it's getting going this week. Heavier volume, trying to make some new close, 8% up. So nice strength there. We'll see if it can continue. Intuit also ratcheting up here again, up 4% this week. Nope, 7% this week. And then Nvidia up 6%. So those are some of your top performing stocks in technology, which was your top performing sector this week. Lots to think about there, but that's what I have for this week's roundup. Let me know your thoughts below in the comments. What do you think about Nvidia? What do you think about this market? Do you think the Qs and the SPY, the pullback is done? Or do you think we need a little bit more time and potentially more downside? Leave a comment below. Love to hear it. Thanks as always for tuning in. Don't forget you can support the show, support IBD. Link in the description of this video. If you're a TC2000 user, check out our website for a lot more tools and indicators. Have a great weekend. We'll see you. Actually, and I don't believe I will be back here next week. I think next week will be a miss. There will be no video. I'm going to try to make something happen if I have the time, but I think I will be MIA next week. So as a heads up, I forgot about that. So that's it for me. I'll see you in 2 weeks if I don't talk to you next week. Take care.